What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 20th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to answer a big question. Are we ready for Bitcoin's institutional wave of adoption? Are we ready to see a Bitcoin ETF in the near future? Are dozens, if not hundreds of companies going to be allocating millions, if not billions of dollars towards Bitcoin as an asset? And are we essentially going to see what we saw with gold as it matured as a market with the launch of its ETF, seeing Bitcoin essentially repeat history and expand multiples from here on out? We've got a lot to unpack here in today's video. If you guys happen to enjoy it, consider dropping a like. And outside of that as well, we've got a sponsored review of Altitude DeFi, a leading technology play within the bridging sector of crypto from one chain to another. So stay tuned for it. You guys won't want to miss it. All right, I want to go ahead and give you guys my honest take on this here. I think a lot of people are betting on this narrative here. It's the only thing that I think has gotten people at the moment providing some at least temporary support here on the 200-week EMA for Bitcoin at the moment, driving up prices from around 25K up towards around $27,000. And it is essentially what a lot of people have been betting on since the lows back in November after the collapse of FTX in 2022. Well, we are now a year later here, practically a year later from that period of time, coming up here in a couple months, from that point in November 2022, where things were just absolutely brutal. It seemed as if there was no hope for crypto, and there was a ton of liquidations at that point. Well, now over the past couple of months, even though global liquidity has continued to contract, even though we continue to see central bank monetary policy continuing to remain in a more hawkish behavior, a lot of people are starting to bet that irrespective of what happens to assets, irrespective of Fed monetary policy, that we are going to charge forward here, that Bitcoin is going to see an ETF approval, that we are going to see massive corporate purchases of Bitcoin following the likes of MicroStrategy. Well, the big thing here I want to really get to at the end of the day is a concept that I believe is imperative to follow right now. It is not a mindset of hoping what could happen or trying to predict favorably towards what we would like to see at the end of the day. It's looking at what's actually going on right now, because Bitcoin has expanded a pretty solid degree here from around a low here of around 15,500, roughly speaking around $16,000, up towards relative highs in July of $32,000. Or around 31,800. So more than a practically doubling in valuation from that point onward. Now we've been pulling back here since mid-July, and I think we are at a really big crossroads here as Bitcoin coils between the 200-week EMA and the red line in our chart, which is the 200-week SMA. Essentially speaking, these two moving averages are kind of serving as this foundational point where we've got to get towards that fundamental question. Are we really ready for institutional adoption? And I come back to that mindset I talked about earlier. We've heard a lot about these ETF proposals sent to the SEC. We've heard, people looking at the BRICS narrative that the dollar's going to collapse and that Bitcoin's going to be the play there. And outside of this, well, that Bitcoin's going to just be this institutional asset similar to gold here. Well, I want to go ahead and try to analyze whether or not Wall Street is buying this, because if we aren't seeing it already in the plays that Wall Street has complete access to. When I say this, I'm talking about not only just your typical kind of brokers in this case, but I'm talking about family funds, I'm talking about hedge funds, I'm talking about the banks themselves or anyone who may be managing investment portfolios. I'm talking about any degree of institutional investors, even corporate treasurers. If we aren't seeing it in the positions that they have direct access to that have a stake in the crypto industry, we should be skeptical. Again, back to our point here. It's not about being a bull or bear here. It's about observing what the market is telling us. So how can we actually go about seeing that here? Well, there is one way we can do this. We can simply take a variety of different ETFs or existing equity positions in the stock market that are readily available to trade. There are no barriers that prevent people from buying it, not to mention for yourself as an individual to put it in your IRA, your 401k, into pension funds, all the things that people say, oh, maybe GBTC is limited by a little bit, right? Well, let's go ahead and see how they're trading against the underlying asset that we're tracking, which is Bitcoin. right? Now, it's one thing we could probably discern a trend here by simply looking at the equity prices itself, but it's very good to actually divide it by the base asset here. And the reason why is because we get a ratio of performance. We see during periods of time that premiums are starting to be paid on some of these equities in order to signal here that, hey, people are starting to bet on a more optimistic outcome for the underlying asset, and vice versa. When it starts to move lower, this is likely signaling a risk-off sentiment, a bearish sentiment here, that essentially the current liquidity and investors that exist in basic equity exchanges like the NASDAQ, the New York Stock Exchange, generally speaking, those who are trading those various different types of assets, those institutions we're talking about, it's a question of whether or not it's going up or down to understand whether or not they're getting more optimistic or more bearish. What we can see here, to be completely fair, since back in December of 2022, right after the FTX collapse, essentially, we saw that there was an increasing premium here in the WMGI, or We're Gonna Make It ETF. This is essentially an ETF that is directly exposed towards a whole range of Bitcoin miners. These are probably some of the best plays for us to track here, because essentially these miners are not going to survive if Bitcoin itself does not continue to head towards higher prices because of the direct costs that miners face. It is a great sentiment measure for the market, but it's not the only one we're going to take a look at. But let's just go ahead and start by looking at this here. We can generally see here since February 2022 in the longer term trend, while we have had some rallies here, albeit they're getting much bigger and bigger here from relative lower levels, we can see that we're setting in lower highs each and every time. We set a lower level here in July of 2023 from where we set it in August of 2022. So a year later here, institutions, even at our highest point here in this year during the recovery up to 32K, miners were still trading at a lower range. But we can see here, following with that as well, that since back in July, not only have the miner stocks that are baked into the We're Gonna Make It ETF continue to decline in their value, but they're actually way underperforming Bitcoin here. We can see since back in July, they've declined 37% more than the underlying asset. So that's not really showcasing some massive amount of institutional demand, and in fact, it probably shows some skepticism from those investors. Now, I'll be fair in saying this here. Since back in December, we are still up 55% on these names, which is why I always recommend that if you guys are looking to invest in crypto and you're more kind of traders or swing traders, and you're looking kind of to maximize returns on both the upside and downside, you can't rest on these miner stocks, right? They are kind of a slightly leveraged bet here, but one that's not too crazy in order to kind of see these returns, right? But that's a big difference, going back to the fundamental discussion, from the 150% premium down towards the current near 50% premium we've seen since those December lows. A lot of that confidence has weighed out of the market. There's no denying it here. This is one of the best and most liquid plays for institutions to get into. But I know some of you are saying, Nick, to be honest, miners have some shortcomings, and I'll be the first ones to say that here. Essentially, miners have stock dilution because they're generally always losing money. This is, again, I think, a prime thing to understand here about most of the available publicly traded companies in mining. Most of them are still losing capital here in this environment, guys, even with the 32K Bitcoin. You look at the quarterly results, they don't lie. They have to file these reports. And the reason for this here, again, is that hash rate is continuing to go up, meaning that difficulty is going up. So you've got to either decrease your GPU and electricity costs, or your cooling costs, or essentially we're going to have to see some people step out of the mining market and that hash rate to drop, therefore the difficulty to drop over time. Well, it doesn't look like any of those are happening soon. So it essentially is going to be a game of musical chairs. Someone is going to be left empty-handed. But considering that stock dilution, which may lead the ETF to underperform against Bitcoin long-term and setting those lower highs, I want to go ahead and spend some time to take a look at maybe a more balanced play. MicroStrategy, right? MicroStrategy at this point has essentially monetized its revenues as a logistics and IT solution infrastructure company, and essentially has utilized the monetization of those revenues to take on debt or loans at very low interest rates back over the past few years since 2020 in order to purchase Bitcoin, essentially becoming a pseudo Bitcoin ETF. And this is a point we've already kind of brought up here in the channel, that MicroStrategy is that Bitcoin ETF. There are no restrictions, not that I'm aware of, and I've spent my time doing due diligence on this, around pension funds buying MicroStrategy, all of the areas, family funds, hedge funds, anyone who'd be buying stocks that you can think of as institutional investors, your 401k or IRA, right? Any restrictions you could think of, there's no preventions from you getting exposure to MicroStrategy. Okay, so I just want to set that out there. It is a publicly traded stock. You can buy it as easily as you can buy Apple, Microsoft, Facebook, Amazon, you name it. Any company you can think of. So this is actually probably even an even better measure here to try to pick up on investor sentiment here, right? We can generally see that really as time progressed, it became very clear really here in the 2020s. I think it was just pure coincidence MicroStrategy started to neutralize over here. But essentially in this ratio, we're taking a look at MicroStrategy divided by Bitcoin. We can really see here since December 2020, there's this kind of neutral range here, right, that we can use as a basis. I think really from here in May 2020, essentially at this range of 0.013. This is kind of the neutral range here. So we've got to either see that this is going to start expanding higher here, right, up to this higher band here that we saw between March 2020 and also here in February 2020, and also these lower levels here, some of these lower ranges here like 0.008 and 0.005, right, similar to the range we saw back in May of 2022 when we had really the majority of that liquidation event in crypto. I really care about what this ratio is saying and if we're going higher or lower on this ratio, because it lets us know whether or not institutions are even hungry for a Bitcoin ETF at the end of the day, right? Because if you want to get that direct exposure, you'd want to invest in an asset that's already available before the ETF comes. Buy the hype, sell the news. That's at least what the mindset is of so many bulls right now in this market. Well, let's take a look here. MicroStrategy really since back here over the past couple years has not made any degree of major moves. It has expanded here since April, and we just go ahead and I'll bring up the percentage tool here. From those absolute lows, it has come up here about 128%. And that's really great to see here. Much better position than where we were back then when a lot of people were worried about the liquidation risk of MicroStrategy as a company. I'm not even here to say that MicroStrategy is likely to get it liquidated. If its liquidation price, as they claim, which is like $3,000 something on Bitcoin, is true, then I think there's a good chance that that's never going to happen. That all being realized here, it is important to note that since back in July here, we have seen a continued decrease of around 18%. The exact same range here where we topped out back in August of 2022 during the relief rally in which we sold our positions, where we took advantage of short-term strength. Now, I want you guys to bear in mind here during that time, Bitcoin only really went up towards around $25,000. Bitcoin in this recent rally went to $32,000, 7K premium. And a lot of people badgered us here, essentially that, oh, Nick, you're missing the relief rally, you're missing this run up, it's a new bull market. Well, we can see here that institutions on Wall Street are not buying the rally, right? They are not optimistic about it. They are having the same skepticism back in August of 2022 as they were here when it comes to MicroStrategy as a play. Right? And sure, MicroStrategy stock is a little bit higher here to match underlying the Bitcoin price, but they're not paying some major premium here like they were back in February 2021 in some anticipation of a Bitcoin ETF, something you would very likely see. But going even beyond this, I want to show another example of this to really solidify this point. Take a look at BlackRock, the individual share price of BlackRock, the huge asset manager that everyone says is just guaranteed to get an ETF. Take a look at how it's performed against the broad financial sector, right? Generally speaking, over the past couple of months since we got the announcement that they filed their application back in June, we're actually lower here, about 5% to 6% for BlackRock. So if BlackRock's really going to be the dominant player here, if it's somehow has some handshaking it's done with the SEC to just guarantee a Bitcoin ETF, why aren't we seeing it in the chart? BlackRock should be exploding here. If crypto is going to be the only asset class that does really well over the next few years in this kind of contraction environment, or at least will be the market leader, and they are going to be the first major institution to get an ETF to market, oh my God, think about the money management fees that they would get off of that, or the ETF maintenance fees that they're going to charge, right? BlackRock should be soaring high right now. Unfortunately, it's not. And if we divide it even by Bitcoin here, doing the same as we did with the other stocks, although I don't think it makes as much sense as what it would be with taking a look at XLF. We should see that BlackRock is kind of this niche financial asset manager that's going to outweigh all the banks and everything that's tied up in the traditional financial system. But I digress here. Generally speaking, we haven't seen any major progress here in BlackRock versus Bitcoin. So, in fact, it's actually, by the way, just to pull back here, significantly down here versus where it was back in November 2022. So this isn't some narrative or story that people are really picking up on. Why is that here? Is it that an ETF will never get approved? Is it that there's no institutional interest in crypto? I'm going to give you guys my candid thoughts here. I think eventually one day, as rightfully as it should be, I think today there should be a Bitcoin ETF that people can invest in. I'm going to go ahead and let you guys know that I believe there should be one. And I think on a moral level, it's everyone's freedom to go out there and buy a Bitcoin ETF, a asset which is very clear. It has its capped supply, especially a spot Bitcoin ETF that would be backed 1-to-1. I think that is absolutely something that should be approved. But I'm not the SEC. And at the end of the day here, while I do believe a ETF will come eventually down the line, the SEC can continue, as they've proven here, to delay it inevitably for the next couple of months, next couple of years. And they can keep on coming up with excuses. The Grayscale court case did not give anyone any grounds against the SEC. The XRP victory that everyone talked about had no significant progress or grounds for the altcoin space. There is more regulatory pressure coming under the crypto space now than there was a year or two ago. It is an uphill battle here for crypto. It's going to be incredibly difficult to get the regulatory framework we want because the SEC is unfortunately putting pressure on this industry, and global regulators are following suit in the EU, the broader Eurozone, and other economic regions across the world. It is the cold reality for the space, guys. And I don't say that because I want it to be that way. It's not because I've got some massive short position on the market. No, it's because I just want to be honest with you guys about the current status of crypto. So many people out there are selling a hopeless narrative that is unfortunately not going to play out. I'll give a great example of this. Again, I'm probably beating it like a dead horse at this point, but you've heard about the ETH2 narrative, right? When Ethereum moved to proof of stake, when we had EIP 1559, it could make Ethereum deflationary, and therefore ETH just had to soar up and kick a new bull market because of this. But so many people ignored the fundamental question, not about supply reduction, but also demand. And unfortunately, since back in September 2022, which again, since then we've been bearish on Ethereum, someone who spent years and my own money and time in this industry and was an early stage adopter of DeFi, I noticed the stagnation in DeFi, and I went back to that question of actual demand. And since then, Ethereum has continued from that point on to decline a whopping 30% from Bitcoin. Yikes. See what happens if you get caught up in narratives? It can leave you losing a lot of money and stressing constantly watching your portfolio. We want to be in the market when the market's making moves, when we know liquidity is on our side. Same here with altcoins. Altcoins have set in lower highs and lower lows ever since back in May of 2022. Over nearly a year and a half here of weakness and stagnation. I come back here to the fundamental reality of what we're in, guys. We're in a contractionary period. Not only does the narrative that everyone is batting on, this idea of an institutional wave, right? And I want to get back to this point here I made earlier, like, do I believe that there are some institutions out there who want to buy Bitcoin? Yes. Do I believe that there's some risk appetite, from everyday investors, institutions who would want a Bitcoin ETF? Yes. But the regulatory framework is not there. The regulatory barriers are incredibly high right now. And this is not probably even the best environment to launch a Bitcoin ETF because interest rates are moving higher. Right now, bonds, you can get a risk-free rate on a 3-month yield of 5.48%. Its highest level we have seen going as far back as 2000. December 2000. And that's the same here with all different types of bonds. We're seeing here, for example, the 10-year yield is at its highest level since 2007 at 4.3%. For the 20-year yield, paying 4.6% right now. And the reason for this? Well, it's quite simple. Federal Reserve is continuing to hold rates at a 22-year high. And whereas many people probably sold you on the idea that the Fed, because it paused rate hikes, that it was going to pivot and lower rates, so many people sold this empty narrative that, if you just even look back at the charts, is not true. At the end of the day, we can see here that because of the reinflation, which we discussed here, in commodities like oil, we're essentially expecting that the Fed funds rate is going to hold at current levels for this meeting and continue to stay up in this range for a long time. And many economists, as well as prediction markets, and even the statements from the Fed, have showcased that many people within the Fed as itself, as an organization, are already predicting another 25 or 50 basis points in increases over the next year or so, albeit at a delayed rate, which I think is a huge mistake. But unfortunately, I'm not the head of the Federal Reserve. It's just my opinion. At the end of the day, though, guys, we see that even the quote-unquote monetary policy experts are expecting another 25 to 50 basis point increase. And that is a far cry away from, say, what a year ago people would have told you, oh, the Fed's going to stop raising at 2.5 or 3% of the Fed funds rate, or 250, 300 basis points. And we were here saying that 5% is at a minimum where we're going. And it seems like we were even too optimistic. Those who say we're too bearish, we're just being realistic, guys. And I'm not here to say that I know exactly what's going to happen, but I gotta tell you guys, if I'm just doing what any investor should do at the end of the day, who's playing their odds, the odds don't look very good to go long on assets. Not when global liquidity is about to reach towards new lows since its relative peak in November 2021. Not when global central bank rates are accelerating at the most rapid rate in history. And even if they slow down, doesn't mean that it's going to start going back down just as fast. In an inflationary environment, rates can rise very fast, as they should, and they can stay there for a very long time until supply and demand reach equilibrium. That's the reality of what we're facing, guys. So when we go in today's Fed meeting, which is going to be later on this afternoon, I think around 2:30 p.m. Eastern Standard Time, listen to the tone of Jerome Powell and the Fed. And tell me whether or not you feel it's going to be an environment where even a cap supply asset like Bitcoin, or even a deflationary asset like Ethereum, is really going to be enough to make it something that people are investing in. It's more of a fundamental question of what is the investment thesis. In an environment where liquidity is contracting, dollars are becoming more scarce. And if dollars are becoming more scarce, then Bitcoin and Ethereum, a likely scenario is that as global liquidity contracts at a faster rate than these cryptocurrencies, and you can also get a yield on taking on debt from the US government at 5% annually, the investment thesis for Bitcoin right now looks pretty weak. Same goes for the FANG stocks, same goes for Apple and Microsoft, which are already trading at ridiculous valuation multiples. And once you realize those fundamental things, it becomes much easier to manage your investment future. Anyways, guys, I want to go ahead and kick off this review of Altitude DeFi, which again is focusing in on solving for one of the biggest issues in DeFi at the moment, which is as we're entering into a multi-chain future with various layer 1s and layer 2s, having a central place where we can bridge liquidity seamlessly across the board. Let's go ahead and dive into it. Alrighty everyone, so in today's sponsored review, I want to spend some time to talk about a DeFi protocol that's leading the way forward when it comes to bridging in crypto markets from one chain to another. Today I want to spend some time to talk about Altitude DeFi. Now for those of you who haven't heard about Altitude DeFi, they're offering a new innovative approach towards bridging from one chain to another, from networks that are EVM compatible like Ethereum or layer 2 solutions like Arbitrum as well as Optimism, towards other layer 2 ecosystems like Polygon, Avalanche, you name it. Essentially, they're focused on a core concept that is growingly important in crypto, which is getting funds from one chain to another smoothly and being able to engage in cross-chain transactions. So I not only want to spend some time to talk about why I believe Altitude DeFi could definitely be a big deal over the next couple of months and the next years as we go into the next potential bull market for crypto, but outside of that as well, I want to talk about this concept of bridging so we understand the importance of just why this is such a big deal for DeFi. So let's go ahead ahead and start off with the basics here. For those of you who might be wondering why Altitude may have some value here in the market and what they're building, we first need to understand how the crypto landscape has evolved. Now, you all know we've been covering crypto here for a long time, since back in 2017. And back since that period of time, we've scaled from having a core ecosystem known as Ethereum, which was the main platform for smart contracts or decentralized applications, and the deployment of ERC20 tokens and NFTs and DeFi applications like Uniswap and Compound. Well, that ecosystem has broadened, and it's gone towards a whole range of other chains that are compatible in the way that the programming language functions. We not only have Ethereum here, but we also have Binance Smart Chain, which has its tied token BNB. We also have a whole range of other networks here that tag in that ecosystem, like Polygon or Matic. We also have, along with that as well, Avalanche, and so many others, including Optimism and Arbitrum, which are leading layer 2 solutions in order to help throughput and scalability. However, as we've kind of broken out into all these different networks that have their own ecosystems of users, they have their own DeFi applications, at the end of the day, it's important to be able to swap or do transactions from one chain to another. There are sometimes DeFi opportunities we want to take advantage of, or tokens we want to purchase, or lending or yield generating opportunities that may be happening on another chain where we need to bridge our assets to. And this concept of bridging is essential to DeFi in today's landscape, especially for larger players who are tapping into those opportunities wherever they may be. Not all the opportunities are all on one single network, and this allows for a whole range of really interesting opportunities to spring up when we can have smooth bridging. The important thing to understand, though, is the problem that has been around for a long time. Before we can understand Altitude's value proposition here, we need to understand the current landscape of bridging. So this concept of bridging from one chain to another, generally known as layer 0, is generally been a concept that's been worked on for the last couple of years. And there have been some really leading companies like Stargate that have really been building on this omni-chain future, this idea that there's going to always be multiple networks, and as these ecosystems grow and they help provide scalability and different use cases, that they need to be able to interact and communicate with one another. And while there's been a lot of innovation here when it comes to the market of bridging, and there has been a lot of opportunity taken advantage of because of this really awesome opportunity, it's allowed for traders to have more flexibility and other interactive measures within DeFi. The important thing to understand here is that bridging is the third or fourth largest component of DeFi already. But the unfortunate reality here is that there's been a ton of hacks so far within these different types of bridging solutions. So it's very important to get security right here. When you have a lot of names like Poly Network, Ronin Network, and even Wormhole experiencing multi-$100 million hacks, it comes back to the fundamentals of security and making sure we can build a secure solution so that this doesn't happen again within the crypto space, because these on-chain transactions are immutable. And while there may be some recovery measures, it's important at the end of the day to get it right from the get-go. So what are some of the differentiating factors here for Altitude as a network here when it comes towards the way that liquidity is provided in order to provide for bridging activities, but outside of that as well, it's security measures? Well, first off, we need to understand here that Altitude employs separate liquidity pools for each chain path, whereas Stargate uses a unified approach. And while that may sound good on paper, it comes with some security risks. Let's say, for example, that you were just aiming to bridge from Ethereum to Arbitrum or from Avalanche to Ethereum. No matter what, if there's an issue on one of many networks that might be within that unified approach from Stargate, it can cause issues within your bridging transaction, even if it's a completely separate network from the two that you're interacting from where you're coming to where you're sending funds to. Essentially speaking, this allows for much higher degrees of security here for you as a user who's utilizing Altitude DeFi. But outside of that as well, there's also chain path independence. Altitude's chain paths are linked with either Ethereum or Arbitrum, ensuring each path operates independently. This design offers significant security advantages over Stargate's unified approach. However, there's a third accolade here that we need to be made aware of, and that's known as secured guaranteed finality. Now, it's important to understand the difference about how transactions are confirmed here between, say, Stargate and Altitude DeFi. So let's go ahead and demonstrate an example here, because it's important to understand how bridging generally kind of works beneath the surface. From my understanding here when it comes to bridging, essentially there's two transactions going on. You have the source chain transaction and you also have the destination chain transaction. Let's say, for example, I wanted to bridge some Ethereum from the Ethereum network to Optimism. From here, I'm going to be making 2 transactions, one of them from my own self-custodial wallet towards a kind of relayer contract address, where essentially once the funds arrive on the secondary chain, there's going to be a destination transaction where from another relayer contract on the Optimism network, I'm going to be getting some funds sent to my wallet, the appropriate amount of ETH that I bridged. All right. Well, essentially speaking, the big differentiating factor here in the way that transactions are confirmed is that through Altitude DeFi, through the cross-chain bridging, it provides a guarantee that funds on the source chain are committed when a transaction is successfully processed on the destination chain. This is vastly different from Stargate's instant guaranteed finality, which guarantees that funds on the destination chain, once the transaction is successfully committed on the source chain. If for whatever reason a user would like to revert back their transaction on the destination chain, they have the ability to do so, having full access to their funds throughout the entire process. So this is really interesting stuff here, not only improving user experience, but outside of that as well, bolstering security here when it comes to these transactions. And the big thing here I wanted to talk about in the long run here is that bridging overall is going to become a huge component within the crypto space as a whole. And so far, we're already seeing a lot of big partnerships here with some of the big DeFi protocols built on top of the leading layer 2 when it comes to TVL and users, and that is none other than Arbitrum. So we see a lot of protocols like Camelot, which is the leading DEX on Arbitrum, building partnerships here with Altitude. We also see Trader Joe, which is the largest decentralized exchange when it comes to Avalanche. And on top of that as well, we also have Layer 0 Labs themselves, the original team behind developing Stargate and this concept of Layer 0, essentially partnering with Altitude DeFi. So we can see that Altitude DeFi has been making some huge waves here and developing with a whole range of ecosystems and EVM compatible chains. Now, it's important here to note as well that at the end of the day, guys, with all bridging as a concept, there's going to continue to be more innovation here over the next coming years. But the question here at the end of the day is whether or not you're bullish on a future of multiple chains. If you do believe that there are going to be various ecosystems and that not only this will help play a role in scalability, but also that these networks are going to offer various opportunities, bridging is essential here. It is allowing so many different types of value opportunities off of the original inefficiencies of not being able to go from one network to another, whether that be arbitrage opportunities or other types of transactions within DeFi. Tapping into opportunity and allowing liquidity to flow smoothly in order to make sure that all these networks can almost in a way act as one singular network. It's a really interesting concept, and I think the concept of layer 0 and this idea of bridging is probably going to be continuously relevant here. Even as someone like myself who was a bit slow towards realizing that layer 2s and other L1s were going to play such a vital role within the crypto ecosystem long term. Now, I want to make it very clear that if you guys are interested in Altitude and what they're building, there are a ton of different places where you can purchase the token from various decentralized exchanges like Uniswap V2 on Ethereum, on Trader Joe, on Avalanche, and also on Camelot through Arbitrum Network. By purchasing ALTD, you not only can have a stake within the protocol itself, but outside of that as well, you have the ability to stake it from within the protocol, earning not only additional ALTD, but along with that, shared protocol fees with those who are utilizing Altitude DeFi for bridging. So if you're betting on the protocol receiving more adoption over the long run, there's a direct way, again, in this case, where you're able to benefit by being an ALTD holder and being able to earn more of the protocol's overall supply by continuing to stake. So it's important to understand, again, that with all protocols, guys, that you have to do your own due diligence here. I think that at the end of the day, bridging is definitely a category to keep an eye on here, especially if you're bullish on further infrastructure expansion through new layer 1s or layer 2s. And no matter which ecosystem you're betting on, it's probably best to bet on something that practically all ecosystems are feeding into and benefit from within the crypto space that is going to support this broad concept of a multi-chain future in crypto, especially when it comes to EVM compatible networks that allow for similar smart contracts and fund transfers to be deployed from one chain to another. Anyways, that's it for today's review, guys. If you guys are interested in learning more about how you can get ALTD, learning more about the project, how you can stake tokens or participate in liquidity pools, and so much more around the project, I'm going to leave a link down below in the description, a couple links that'll give you guys some details and resources around the project. But that's going to be it for today's video, everyone. Thank you all so much for watching, and until the next one, I'll see you all in the next video. Take care, everyone.